Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Vanda Pharmaceuticals.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, let's get right into the thick of it. If you've looked at your terminal this morning, you probably saw Vanda lighting up the screen.
Oh yeah, absolutely.
We are seeing just a massive gap up in the pre-market. The volume is heavy, and the options chain is, well, it's lighting up like a Christmas tree.
Right.
It feels like one of those days where the market suddenly wakes up and realizes it completely mispriced something. But, usually when a biotech small cap pops like this, my first instinct is...
Trap.
Exactly. It's a trap. It's flashy. People get really excited, and then it just fades. So, convince me. What is actually driving this frenzy? Is this real, or is it just noise?
It's definitely real, and for once, it's not just some rumor or buyout speculation.
Yeah.
It's a hard, fundamental catalyst. Vanda just secured FDA approval for Bysanti.
Okay.
Yeah, that's the bland name for a drug called milsaperidone.
Milsaperidone. Got it. I'm assuming this isn't just another generic headache pill if the stock is moving like this. What is the actual utility here?
Far from it. This is an antipsychotic. Yeah. But the specific approval text is what triggered the algorithms and all that institutional buying this morning.
What did it say?
The FDA approved it as a first-line therapy for acute manic and mixed episodes associated with bipolar I disorder, and also for schizophrenia.
Okay, I want to pause on that phrase, first line. We hear that a lot in pharma analysis, but I feel like people just gloss right over it.
They do, yeah.
Why does that specific distinction matter so much here? Why isn't just approved good enough?
That's the multi-million-dollar distinction right there. Think of it this way. If you get approved as a second-line or adjunctive therapy, it means a patient has to fail on another drug first.
Usually a cheap generic.
Exactly. You have to fail on the generic before the insurance company will agree to pay for your new drug. You're essentially fighting for scraps, or, for the most difficult treatment-resistant cases.
So you're basically the backup quarterback. You only get in the game if the starter gets injured or plays terribly.
That is a perfect analogy. But first line means a doctor can prescribe this immediately, right out of the gate. You are entering the main arena from day one. You aren't the backup plan, you're the starter.
So it opens up the entire total addressable market immediately, rather than just waiting for the difficult cases.
Wow.
That explains the massive volume we're seeing.
Precisely. And in psychiatry, that is everything. The sentiment shift we're seeing today, where headlines are actually calling this a new era for Vanda, is because the market suddenly realizes this isn't some niche product anymore.
It's a primary treatment option.
Right, for major psychiatric conditions.
I noticed the options volume was unusually high, which usually implies smart money positioning for a sustained move, not just a day trade. But let's play devil's advocate for a second.
Sure.
Great drug, great label, but Vanda is a small cap. A great drug in a broke company is still a terrible investment for you to make.
Oh, absolutely.
We've seen plenty of biotechs get an approval and then completely botch the launch because they have zero cash to hire sales reps.
That is the classic commercialization valley of death. It happens all the time.
Right. So before we get too excited about the science or the FDA stamp of approval, let's look at the actual plumbing. How did they perform in 2025? Are they bleeding cash? Are they going to need to dilute us just to keep the lights on?
This is where Vanda really separates itself from the typical speculative biotech you see popping on social media. They're actually generating meaningful revenue.
What are the numbers?
For the full year, 2025, they brought in $216.1 million. That is a 9% increase over 2024.
9%. Okay, playing the skeptic here. In the grand scheme of high-growth tech or even big pharma, 9% sounds a little sleepy.
I get that.
But for a mature biotech waiting on a new launch, is that considered good?
Context is key here. Stable is the floor, but accelerating is what we're actually looking for. You have to look at what drove that 9%. It wasn't just them raising prices on dying drugs to squeeze out margin, which is a really common trick to make earnings look better. This was volume-driven.
Really?
Yeah. The star player right now is Fanapt. Sales for Fanapt rose 24% to $117.3 million.
Okay, 24% growth on the core product is very solid. That's actual momentum. But again, I have to ask, is that just price hikes? Did they just charge 24% more?
No, and this is the data point that really jumped out at me from the earnings call. Total prescriptions were up 28%.
Wow.
Right. But the leading indicator, the alpha, in the data, if you will, is the new-to-brand prescriptions. Those surged 149%.
Wait, hold on. 149%. That seems exceptionally high for a drug that's already been on the market.
It is.
Usually you see that kind of growth in the first 6 months of a launch, not later in the cycle. What is going on there?
It is exceptionally high. It signals that their commercial team has cracked the code. It could be their direct-to-consumer marketing, or it could be how their sales force is targeting doctors.
But it's working.
Exactly. What it means is that doctors aren't just refilling scripts for old patients. They are actively starting new patients on Fanapt at more than double the rate they were previously.
That actually changes my view on the risk profile significantly.
How so?
Well, if they have a sales engine that can generate 149% growth in new scripts for an existing drug, I have a lot more confidence they can sell the new drug, Bysanti. It proves the commercial infrastructure actually works.
Precisely. You aren't betting on a rookie commercial team trying to figure out how to sell a pill. You're betting on a team that is already putting points on the board. And that leads directly to the guidance.
What are they projecting?
For 2026, they are projecting revenue between $230 and $260 million. They expect Fanapt alone to do $150 to $170 million.
So the base business covers the bills while the new drug ramps up. That's a luxury most biotechs just don't have.
Correct. They aren't betting the farm on the launch. The farm is already profitable.
Let's pivot back to the new kid on the block, Bysanti. From a wealth-building investment thesis, why do you and I care about another antipsychotic? I feel like I see ads for these constantly.
They are everywhere.
Is there really a moat here, or is this just another Me Too drug in a really crowded room? What prevents a generic from coming in 6 months from now and just eating their lunch?
It comes down to intellectual property and the specific dynamics of psychiatry. In many sectors, a moat is brand loyalty, like buying a Coke versus a Pepsi.
Right.
In pharma, your moat is your patent protection and the switching costs. Vanda has built an absolute fortress of IP around these differentiated antipsychotics. Bysanti isn't a generic copycat. It has a unique profile targeting high unmet needs.
Explain the switching cost aspect in this context. I understand it in software, like it's hard to switch from Apple to Android because all your photos and messages are there. But how does that apply to pills?
In psychiatry, finding a drug that works is incredibly difficult. It's often a very painful process of trial and error for the patient. So if a doctor puts a patient with bipolar I on Bysanti, and it stabilizes them, keeps them out of the hospital, lets them hold down a job, that doctor is terrified to switch them to a generic or a different drug just to save the insurance company money.
Because the risk of a relapse is just too high.
Exactly. And a relapse in bipolar I isn't just a nuisance like a headache returning. It's potentially a severe hospitalization event.
The stakes are incredibly high.
They are. So once Vanda wins that patient, they tend to keep that patient for a very long time. That makes the revenue very sticky. It's a recurring revenue model that is highly defensible against competitors.
So the stickiness creates a long tail of cash flow. That's the wealth part of the equation for you listening. But when does that cash flow actually start? We have the approval today, but when do we see sales? Is this happening tomorrow?
The U.S. launch is planned for Q3 2026.
Q3. Okay, so we have a couple of quarters of dead air here. That worries me slightly. Does the stock drift lower while we wait?
I wouldn't call it dead air. I'd call it the setup. The market is forward-looking. They are pricing in the Q3 and Q4 numbers right now.
That's true.
If you wait until the sales numbers are actually reported in 2027, you've likely missed the biggest part of the move. The institutional money buys the approval and the setup, not just the lagging result.
Fair point. Buy the rumor, sell the news, or in this case, buy the approval, hold for the launch. But I have another concern. We have Fanapt doing well and Bysanti launching. Is Vanda just a two-trick pony?
That's a common fear.
If something happens to the antipsychotic market, say, a new class of drugs comes out that completely changes the paradigm, does this company just go to zero?
That's the standard bear case for small pharma concentration risk. And it's a valid fear. But digging into the pipeline, there is surprisingly decent diversity here. They have multiple shots on goal. For example, you have Nereus.
Nereus? Sounds like a Greek god of water.
Which is fitting because it was recently approved for the prevention of motion-induced vomiting.
Motion sickness. Okay. I mean, that's useful. I get seasick. But is there a billion-dollar market in motion sickness? That sounds like something I buy at a gas station convenience store, not something that drives the stock price to the moon.
On its own, no, it's not a blockbuster. It's a nice, steady earner, but it won't 10x the stock. But don't write it off yet. We also have imsidolimab, which is targeting generalized pustular psoriasis.
Okay.
They submitted the biologics license application, the BLA, in Q4 2025. So that is a high-value dermatology asset potentially coming online.
So we have psychiatry, we have dermatology. That's a decent mix. But I want to go back to Nearest. I was looking through our notes, and I saw something that made me sit right up straight.
The GLP-1 connection?
Yes, there is a mention of a connection to GLP-1s.
This is the hidden gem in the investment thesis. This is what the smart money is whispering about and what really isn't fully priced in yet.
Break down the logic for me. GLP-1s are the weight loss drugs, right? The Ozempics and Wegovy's of the world.
Correct. The absolute biggest pharmaceutical trend of the decade. But what is the #1 complaint about those drugs? What is the #1 reason people quit taking them?
Nausea, gastric distress. Everyone talks about it.
Exactly. It's brutal for some people. Wegovy stomach, Ozempic face, it's all related to how these drugs work on the digestive system. Well, Vanda is initiating phase 3 trials for Nearest in the first half of 2026, specifically to treat nausea caused by GLP-1s.
That is incredibly clever.
It's a classic pivot. They realize they have a highly effective drug that stops vomiting. Why limit it to seasickness? Why not target the millions of people injecting themselves with a drug that makes them nauseous every single week?
It's a pick and shovel play. You don't have to try to invent a better weight loss drug and compete with Eli Lilly or Novo Nordisk, which is basically a suicide mission for a company this size. You just sell the solution to the side effect.
Right. If Nearest becomes the standard of care companion drug like, here is your Wegovy prescription, and here's your Nearest to keep you feeling good, that market is potentially larger than their entire psychiatric portfolio combined.
That is the kind of optionality I really like. It's a free call option on the GLP-1 boom embedded in a stock that's currently valued like a boring antipsychotic company.
That's a great way to frame it. You're buying the antipsychotic cash flow, and you're getting the GLP-1 lottery ticket completely for free.
But let's rein it in. Innovation is very expensive. Running a phase 3 trial for Nearest is going to cost millions. Launching Bysanti is going to cost millions in sales rep salaries and steak dinners for doctors.
It adds up fast.
Do they actually have the cash? Or am I going to wake up next week to a secondary offering that dilutes my shares by 20%?
Okay.
Because that kills the trade faster than anything.
That is the very first question every biotech investor should ask. How long is the runway? I scrutinized the balance sheet, and it looks surprisingly clean. There is no significant debt load highlighted in the recent disclosures.
No significant debt. That is rare for a small-cap biotech. Usually they are leveraged to the hilt or living offering to offering.
It is extremely rare, and it goes right back to that FANAPT revenue. They are using the cash generated by the current business to fund the future business. They are reinvesting into commercial infrastructure and those direct-to-consumer campaigns we mentioned.
So they are self-funding. They aren't burning the furniture to heat the house.
Exactly. It's a virtuous cycle. FANAPT pays for the Bysanti launch. Bysanti pays for the new Rios trials. It's a completely sustainable ecosystem.
That is reassuring. Now, let's talk about the institutional flow again. We saw the gap up. We saw the volume.
Yep.
But when I look for insider buying, the CEO, the CFO, the board, are they buying shares right now?
Interestingly, no. I checked the Form 4s and the 13F filings. There is no specific recent cluster buying from insiders.
That's a bit of a yellow flag, isn't it? If this is such a slam dunk, why aren't the insiders backing up the truck?
It can definitely be interpreted that way, but I think it tells a different story here. The current move is driven almost entirely by the news catalyst and the commercial momentum. It's institutional flow chasing the data.
Okay.
The insiders might be in a blackout period, or they might just be holding their existing large positions. It tells me that the market is reacting to the fundamental value of the approval, not to some signal that the insiders know something we don't.
So it's a pure momentum and fundamental play, not an insider accumulation play. That actually makes the chart cleaner in a way.
Correct. The conviction is coming from the math, not the management's wallet.
Okay, I'm feeling pretty good about the bull case here, but my job is to protect your capital.
Let's look at the dark side. What kills this trade? What is the bear case that keeps the CEO awake at night?
There are two main risks we need to be very clear-eyed about. The first is simply execution risk.
Which is fancy talk for they might mess it up, basically. Launching a drug is logistic warfare. You have to get on insurance formularies. You have to educate thousands of psychiatrists who are already set in their ways. You have to handle complex supply chains.
Right.
If they report Q3 or Q4 numbers in 2026, and they miss that $230 to $260 million guidance range, the stock will get crushed.
The market hates disappointment,
Uh-huh.
especially when a stock is priced for perfection.
Exactly. If the growth story stumbles, the multiple collapses. The second risk involves legacy issues. There has been some heavy scrutiny regarding HT-LAOZ from prior FDA decisions.
HETLAOZ, that's their sleep disorder drug, right? What kind of baggage are we talking about? Lawsuits, recalls?
Mostly regulatory headaches and investigations into marketing practices or clinical data disputes. It's the kind of thing that hangs over a stock like a dark cloud. It suppresses the valuation because investors are just afraid of a sudden fine or restriction.
So there's basically a legal discount applied to the stock right now.
Yes. However, these risks seem contained right now because the revenue floor from Fanapt is so solid. Even if HT-LAOZ struggles or faces headwinds, Fanapt is carrying the load, and Bysanti is the new engine. The diversification acts as a major safety net.
So the thesis isn't broken if HT-LAOZ fails, it's just dented.
Precisely. It's not an existential threat, but it is a drag on the stock price.
All right, so for you sitting here thinking, okay, I like the story, I like the GLP-1 angle, I like the financials, how do we time this? I hate buying a gap up and then sitting on dead money for 6 months while the excitement just fades. What is the catalyst calendar?
We have a very clear schedule, which really helps with timing. First up is May 2026. We get the Q1 earnings.
That's the report card.
It's the first real test of that guidance.
Yeah.
We need to see them reiterate or raise that $230 to $260 million projection.
Sure.
If they confirm the guidance, it strongly validates the bull thesis.
And if they lower it,
then you reevaluate immediately. A guide down this early in the year would be a major warning sign. After May, throughout Q2 2026, we are going to see the soft news. Preparations for the Bysanti launch. News about Salesforce hiring, maybe some early feedback from key opinion leaders in psychiatry.
the drumbeat before the march.
And we absolutely cannot ignore the macro factor. There is a massive sector rotation happening right now. Investors are moving money out of mega-cap tech and into biotech amid expectations of rate cuts.
Because when interest rates drop, speculative assets with long-dated cash flows like biotech become much more attractive. The cost of capital goes down.
Correct. A rising tide lifts all boats. And Vanda has a brand new sale with Bysanti. The macro environment is providing a massive tailwind just as they are launching their biggest product.
So bring it home for us. You've looked at the data, the risks, the pipeline, and the macro environment. If you had to put a number on it, where does Vanda land?
I'm giving it a bullish score of 9 out of 10.
9 out of 10. That is incredibly high praise from you. You usually cap out at a 7 for biotechs because of the inherent volatility. Give me the quick elevator pitch. Why a 9?
It's the rare combination of safety and upside.
Yeah.
Usually you have to choose one. Here you have a cash-generative business with Fanapt that actively prevents the downside. Layered on top of that, you have a new blockbuster in Bysanti launching into a first-line market.
Right.
And on top of that, you have the explosive potential of the near-US GLP-1 play. The strategy is buy now ahead of the commercialization to capture that value re-rating.
And the timeline. Is this a quick trade or a marriage?
This is a multi-year hold. You want to ride this through the Bysanti launch in late 2026 and stick around for the near-US data readouts. That's where the real wealth compounding happens.
I like it. Clear, concise, and highly actionable.
It's a very compelling story.
You know, before we wrap up, I have one final thought for you regarding that Neria's point. We tend to focus on the primary drug Bysanti in this case because that's the bird in the hand. But if Vanda successfully positions itself as the sidecar to the GLP-1 revolution, that completely changes the entire valuation model of the company. We wouldn't be valuing them as a psychiatry company anymore. We'd be valuing them as a weight loss infrastructure play. That multiple expansion could be massive. It's just something for you to chew on while you watch the ticker.
That is the wild card that could turn a good investment into a truly legendary one.
Thanks for joining Smart Wealth with Joshua. We'll see you in the next one.